Welcome to the Explainer. If you've been watching the crypto market lately, you've probably felt it, that kind of stalled feeling, like the market is stuck in a giant tug of war. Well, today, we're going to dig into a really sharp analysis from Coinbase to figure out exactly who is pulling on each end of that rope.
And you can literally see it on the charts, right? A market that just can't seem to make up its mind. But this isn't just random noise. No, it's a real battle between some very powerful and very different forces. So let's break down who they are and what's driving them.
According to the research, we're basically seeing a clash of three titans. You've got the huge macroeconomic environment. Then you have the surprising moves of long-term Bitcoin holders. And finally, there's this fresh surge of new investor demand. Let's unpack each one.
Okay, let's start with the absolute 800-pound gorilla in the room, the U.S. Federal Reserve. I mean, every single thing they do sends ripples through all the financial markets, and you better believe crypto is no exception.
So on October 29th, the Fed did what a lot of people wanted. They cut interest rates by 25 basis points. Now, you'd think that'd be a clear green light for a market rally, wouldn't you? Cheaper money, more investment, but, well, it's just not that simple.
See, it wasn't what the Fed did, it was what Fed Chair Jerome Powell said. The market hung on his every word, and his message was pretty blunt. Don't count on another cut in December. That one little comment was a huge signal that the Fed is pumping the brakes.
And you can see the impact right here. It was instant. The market's odds of another rate cut in December just plummeted from a near certainty at 93% all the way down to 70%. That right there is the power of just a few words from the Fed.
But okay, here's the twist. While the Fed is being all cautious with rates, it's also ending its quantitative tightening program. So, in simple terms, they're about to stop pulling money out of the financial system. That's a huge deal for liquidity, and it adds this really fascinating, complex layer to the whole picture.
All right, so we've got the Fed sending these mixed signals, which is creating a lot of uncertainty. Now let's zoom in a bit and look at a force that's coming from deep within the crypto world itself, the sleeping giants of Bitcoin.
So, to really get what's happening here, we need to talk about something called dormant supply. Just think of it like a buried treasure chest of Bitcoin that hasn't been touched in years and years. When that chest finally gets unlocked, everyone pays attention. It's a massive signal to the market.
And this past July, one of those treasure chests didn't just get unlocked, it was blown wide open. A Satoshi-era wallet, a wallet that's been sitting there untouched since the very dawn of Bitcoin, suddenly woke up.
And listen, we are not talking about a few coins here. This was an absolute tidal wave. 80,000 Bitcoin, all on the move at once.
At the time, that was worth over $9 billion. And this wasn't some random wallet transfer. No, this was a highly calculated, professional sale.
So that brings up the, $9 billion question, doesn't it? Why now? After holding for 14 years, through all the crazy highs and the crushing lows, what made this the moment to finally cash out?
Well, the Coinbase analysis gives us three really interesting theories. First, the obvious one, just taking profits. Can't blame them for that. Second, maybe a smart move to de-risk with the global economy looking a little shaky. And then there's a third, kind of sci-fi possibility, a fear that quantum computers could one day crack older Bitcoin wallets.
So on one side of the rope, you have this old OG money moving out. But at the exact same time, you have a whole new wave of money trying to flood in. And that brings us to our third and final force in this tug-of-war, the race for altcoin ETFs.
This past week was a really big milestone. For the first time ever, investors in the US can just go out and buy spot altcoin ETFs for assets like Solana, Hedera, and Litecoin. This is an absolute game changer for making crypto more accessible.
But here's where the story gets fascinating. The launch day numbers were not even close to equal. Look at this. Bitwise's Solana ETF, BSOL, was the clear breakout star. It pulled in $57 million in volume, just completely leaving everyone else in the dust.
So what was BSL's secret sauce? Well, it really just comes down to the details. It had a lower fee, which was even waived at the start, and a more standard, familiar ETF structure. For a lot of investors, that just made it a much more attractive product than Grayscale's, which was a converted trust.
And this tells us something so crucial about where the market is right now. Investors aren't just blindly buying anything with a crypto sticker on it anymore. They are smart, they're doing their homework, and they're demanding quality products with fair fees.
Okay, so we've got the cautious Fed, we've got the awakening whales selling off, and we've got this very selective new demand for ETFs. So let's try to put all these pieces together and see if we can get a glimpse of what the future might hold.
This right here is the heart of the conflict, the core of the tug of war. You've got the Fed's higher for longer interest rate policy acting as this massive headwind, pushing the market back. But then you have this incredible strong demand for new crypto products acting as a powerful tailwind. It's a classic standoff.
So, who wins? Which side is going to give first? Well, to get a clue, Coinbase has developed this custom index that actually tracks the global money supply. And honestly, its track record for predicting Bitcoin's price has been kind of spooky good. So, what's this crystal ball telling us? Well, it suggests we might need to buckle up for a bit of a bumpy November. But it's also flashing green for December, pointing to a potential new surge of liquidity that could really reignite the market. And if we look even further out to the first half of 2026, the prospect of more Fed rate cuts could be the rocket fuel everyone is waiting for.
So that's where we are, left with this epic showdown. On one side of the rope, you have the cautious, powerful Fed. On the other, a new, smarter way of crypto demand. With a potential flood of new liquidity on the horizon, which side is finally going to win this crypto tug of war? The next few months are going to be absolutely fascinating to watch.